Hello, everyone, and thanks for joining me. Today, I'll be looking at Greenfire Resources. Going to do kind of a deeper dive. It's going to be more of a study for me, I guess, just trying to kind of better understand the asset, what it's all about. I made a post earlier today talking about the production, so I'll provide an update on that. But if you see what's unique about this place, the asset, there's basically two sides to it in a sense. There's this Greenfire Resources demo plant and basically pads and development of the oil sands, and then you have basically like an expansion project here. So this is being held essentially by Greenfire Resources. There's also like a working interest that I'm going to be talking about when it comes to the expansion side, where they have about 75% kind of working interest in the asset. So there's like a JV partnership. But before I do a deep dive, one thing I noticed on this map, there's a place called Famous Barbecue that not far away. So then I kind of look into it. There's like a shed or something, and there's like a barbecue, and there's like a barbecue with a chair, I guess, and a shed behind it. So I thought it was pretty funny, whoever kind of placed it there. So that's a little entertaining in a sense. But if we kind of do a deeper dive into those assets, I don't think I've ever seen kind of like a development like this where you have basically two sites, but the facilities, the central process facility is not being utilized. The plant is not being utilized to develop further resource. And I think the reason for that could be that you have this basically like a river here, right? So there's this terrain that maybe the regulator did not really allow expansion across that. So, which creates a very kind of unique asset to be investigated in a sense. So, what I posted today about this asset, and I talked a little bit about kind of how the banks collect this data from AER and how they report on that. But what I essentially said is that that little the demo, right? So the capacity for the demo essentially. So that guy here, and you can see basically you have a plant, you have like pipelines basically. So you have like four pipes. I assume one of them is taking steam to the pads, and the other one is carrying essentially emulsion and casing gas back. And you can see it leads to the pads where the oil is being kind of produced from. So there, this is kind of their design, I guess, from legacy pads, and this is another pad that you see here. And again, we can see kind of those pipes are carrying the emulsion back, and I assume casing gas, and the steam is coming in to steam the formations. So, so for that demo asset, so for this part of Greenfire, and this is something new to me that I learned just recently. So the capacity is about 7,500,000 barrels per day, and it seems like there is 100% ownership by Greenfire. But this is kind of not the case when it comes to the expansion side, where most of the production is coming from. Um, and what's happening there is that you essentially have working interest of 75%, which is up to 26,300. So 26,300 um, 300 barrels per day. And the capacity, the 100% capacity for the asset is about 35,000 barrels per day, where out of which 75% is Greenfire. And the working interest is about 26,000. So 26,300 for the expansion side. So the 25% ownership is my understanding is with CNOC, like that's the Chinese ownership company. So it's kind of an intriguing configuration because what's going on is that when they report to the regulator, they some of the banks they actually report only the expansion side oil production rates. So this guy right here, where obviously you have central process facilities, you have the pads, so those are being steamed and produce oil based on the steam that's being generated here. But then I think some banks they kind of forget about that guy that still produces oil, and we're gonna do a deeper dive into kind of the trends over the past 20 years or so of what's been taking place there. So if I was to kind of provide like a deeper dive on maybe the history of that, but before I do that, I can tell you that based on my data analytics tool that I developed, where I extract the data from the public domain and kind of really integrate a lot of the parameters to better understand the asset, I can tell you that for August, the reported oil rate for the entire asset here. So obviously, one have to do like some math to remove the expansion, and I'll provide some data associated with that. But basically, the entire production for the asset was up to 26,313 barrels per day. So this is both for demo and the expansion. And the previous month production for July, from the public data that was reported, was 25,317, and it was like basically an uplift on the asset of 3.9%. And my understanding from the data that's been gathered, kind of like in aggregate, is that there are about 43 producers, and the average producer produces about 612 barrels a day, and the best producing well produces about 1,590 barrels per day. And the number of wells above the average is about 18, so that average is 612 barrels per day, and below is 25. So out of the 43, 18 kind of overperformed the average. The top 18 wells produce 76% of the overall production, and the top five wells produce 27%. So you can kind of tell that there's maybe some wells that coming online that are like really good performers. And based on kind of the data shared here is that you have some wells that produce close to 1,600 barrels per day. You can tell that maybe this guy's having success kind of uh, bringing like really productive wells online. So for both sides, the overall average injections of steam per day, because to drain the oil you need to inject the steam, so you can kind of reduce the viscosity of the oil, so you can drain by gravity. So that injection rate of steam is 97,932 based on the data I extracted. And I identified about 59 SECD injectors, and the overall steam ratio from both sides is 3.7. But there is a big difference between the steam to oil ratio that's coming from the demo side and the steam to oil ratio coming from the expansion side, and we're going to be talking about that. When it comes to the water produced and steam ratio for that hanging stone SECD asset, so I'm getting the water produced to steam ratio, so it's about 1.08, and ideally you would want that ratio to be 1, so this is essentially perfect for the entire asset. And the ratio of water produced compared to the volume of total liquids produced, so it's also known as water cut, is about 80%, which is kind of typical to a SECD asset. But again, there is a little bit of a difference between the demo and the expansion side, how much steam is being produced. And from what I noticed, the production increased from month over month in 46% of the oil producing wells. But again, it's not recently updated data. It's kind of as of August. So we're going to be getting data. Now we're in October, so we're going to be getting data soon for September, and I will do some analysis on that data. And I don't see any change month over month from, like, let's say July to August, of new wells being reported. So that's kind of what I'm seeing. But again, let me know if you don't think this is like representative of reality, because I do have a tool that compiles all the data. So far, the match to what the banks have reported is pretty good. But let me know if you see something that's kind of not representative. So let's do a deeper dive into kind of historic development of each one of those little assets. And the first thing we're going to talk about the demo site. And again, what separates between them is that kind of like this body of water here, which is really interesting, right? Like I don't know exactly what it's called, but it's kind of going around here. Maybe we can kind of do like more of a, yeah, you can't really like drill under it, which maybe explains why they couldn't put pipes perhaps between um kind of between this body of water and between this, so they had to almost like separate the two assets. And you can see it here, right? So it's a continuous water, and very kind of, I assume there's a lot of vegetation there. So yeah, you have basically those two separate assets, and some of the banks don't even report the production on the smaller asset, which is kind of insane. So maybe there's value being added through that. And what I can tell you, like this production right here, at least from August, from what I'm seeing, I'm getting about 28, so 2,857 barrels per day. and the previous month production was about 3,038. So it's very different kind of metric because the production there, I don't know if I guess we're gonna learn soon, but it seems to me like the more of the emphasis is about the expansion project, which is basically the bigger one. It's not the demo one, but overall production from the smaller asset is about, as I mentioned, is about okay, where is that? Yeah, so it's about 2,857, and the production from the bigger asset is about 23,456. So now you have to combine the two and kind of aggregate this data, right? Where you have very different kind of water cuts coming from the asset. You have very different SORs, and just by looking at the SORs and the water cuts, I'm suspecting that the infill and refill integration is being done mainly on the expansion side. So anyway, let's kind of talk a little bit about the demo project. So this demo project, based on kind of historically reported information, kind of providing a little bit of a background. And again, if we zoom in, you start seeing significant kind of facilities here. I wonder if they have an opportunity here for further redevelopment. I guess we're going to be seeing maybe in the seismic a little bit more, and kind of where the bitumen is, if they're able to kind of do a little bit more here, because those facilities are extremely valuable. And obviously we know right now that the Water's Energy Fund is was trying to take like a stake in the company, so something is going on there. But maybe there is an opportunity here to kind of redevelop that asset, maybe integrate some of those infill refill wells. But yeah, that expansion side looks also very exciting, because clearly Jacobs, I think they spend a lot of money on developing those facilities and kind of bringing that asset towards that 35,000 capacity, the barrels per day capacity that you could advance. And obviously they have some really kind of slightly bigger pads here versus kind of, I guess, the smaller ones. But anyway, if we're looking at the demo site right here, and we look at the kind of the history of what took place here. So it has been operational since 1999, and approved production capacity was about 11,000 barrels per day. And obviously, it's about 2,800, 2,900. So there's a lot of opportunity here to maybe bring that above, but I don't know if the investment is being directed towards that asset. But AER, so Alberta Energy Regulator, did approve some amendments here to the scheme. And from the operational project operational history, it's been operating since 1999 to May of 2016. So there was continuous 17-year production on this asset. There was suspension from May 2016 to September 2018. I suspect it has maybe something to do with low oil prices. Basically, the Saudis flooding the market, and they're basically suspending production on the asset. Maybe it was maybe a higher cost of supply, right? Because perhaps they were trucking the oil and it was like very low cost, so the netbacks maybe were not that high. And it operated from September 2018 to April 2020, and again April 2020 suspension in May 2020 to December 2020. And guess what happened 2020? We had COVID. So again, you see basically the company responded, and responded right away to any basically low cost prices by suspending operations. They restarted activities in December 2020, and production recommenced March 2021. Um, so this is kind of very intriguing to me personally. And if we go into the other asset and talk a little bit about the history of the expansion project. So expansion project of what happened there. So that expansion project, it has at least in the past, it has about approved production capacity to about 30,000 barrels per day, like from historic documentation that I'm seeing. But it seems like right now they're basically reporting in their corporate slides that the 100% capacity is 35,000 barrels per day. So 75% is the Greenfire working interest capacity. So that's kind of intriguing, because when I'll do my own kind of calculations to better understand the barrels and kind of the cost of supply and partitioning, I think it's important to consider that there's a JV partner there on that portion of that asset. There is no partner, it seems, on the demo asset, which is very important to know. So the project operational history, the first team was in April 2017. So this is a much younger asset, clearly, right? So versus the little demo asset. So this is much older, 1999, and this guy is 2017. And the first production in August 2017. And in September 2021, there was transfer of ownership to Greenfire, and I assume that ownership was from Jacobs that developed that asset. So if we kind of do a deeper dive, and now I'm gonna switch. How am I gonna do this? The stage. Yeah. So hopefully you guys are able to see me. I'm kind of experimenting a little bit here with the software, but seems like it's all good. And again, if I'm too slow, please put me on double speed and kind of so you can watch this, because I'm trying to learn about this asset as well. So before in the Google's map, we saw the two assets, the demo and the expansion. So right now we're going to be talking a little bit more about the expansion side from the legacy slides. I guess this is from 2021 or 2022 Alberta Energy Regulator slides. And what you see here is essentially more of a deeper kind of dive in to what's going on. And as mentioned, the overall production for the entire asset, right? So Hanging Stone expansion and demo today is about 26,313, and for this specific one, production right now is 23,456, and we're going to be getting soon the September data, so that's really important to mention. And let's kind of do a deeper dive on this guy and better try to better understand what's going on. So this project is located 65 kilometers south of Fort McMurray, Alberta. So yeah, so Fort McMurray down 65 kilometers. On that Google map that we saw, you can see the plant. So just like I would have shared, that it's usually called a CPF, so Central Process Facility. And now we can start seeing that all those pads that I was showing, pad 6, 5, 4, pad 3. So that's where kind of the production, I guess, is coming from to fill, and then maybe the infills and refills that they're integrating coming from those pads as well. And here on the left, you can see kind of a plan that puts us where in the proper space, kind of where the asset is located, relatively speaking. So the lifespan production. So like we said, in 2017, production was launched, and we can see it here. And August production was kind of invoked, right? So there was a stage of steaming, and you can see it here. If I was to draw right here, okay, maybe we can pick a different color. So when initially, like, you don't see oil production up, but this is normal. I think it's a good learning for people that's watching this, and I talked about this in the past. This is a circulation stage where if you have injector and producer, you basically circulate that area by injecting steam in both and kind of produce water, and you create communication between the two, which is kind of healthy, what's been going on here. And now you see the oil responding and you produce, and it seems like they were able to achieve about 42 4300 cubes a day. And the way you would do it, and I shared it in my previous videos, to know like what that peak production would have been, you take like 4200, let's say, times 6.29, and we get about 26,400 barrels per day. And as reference, today they produce about 23,456 on that expansion asset, right? The entire asset produces about 26,000. So that's good to know, because it kind of tells us that they could at least achieve their previous rates, because they operated at those rates in the past. Now, the associated steam injection here in the past was about 10,000 cubes. So that will be about 62, 63,000 barrels per day. And the other thing we could see here, which is kind of important to me personally, um, the sharing the well count. So well count here, it seems like, so this is 35, this is 30. And if we go here, let's say well count is 32. And on that expansion side, based on kind of what I see from the regulator data, and I can tell you this number right now, I see the overall number of producing wells is about 29, and the average well producing about 808 barrels per day on that specific expansion asset, not the demo. So looks like the expansion asset has way more productive wells, which kind of makes sense from a SAGD perspective. But it seems like the amount of producers is, so I'm getting 29. And again, let me know in the comments if you see something different, because I want to make sure that what I study here is representative of reality, and I think it is. But let me know. So it seems like there's further opportunity. Like if you have, let's say, injector producer, so you can put like an infill here, and they have those like refill wells that are very long, right? So as steam chambers develop, they kind of have refill. So maybe some wells failed or kind of stopped producing. The chamber was developed, and now they basically kind of reutilizing some of that space and kind of sidetracking or stepping out. But maybe there is more kind of space on some of those beds here to utilize more of the wells, to kind of from a surface perspective, to kind of drill more of the infills and refills that they plan on doing. That is at least what it seems to me. And here towards 2022, you can see they kind of were getting back to those previous highs, and you can see the shut-ins that they were talking about. So um, I think the shut-ins were mainly in the demo, it seems like. So suspended production during the Saudis kind of oil glut in 20, which is prior to 2017. But then we talked about COVID a little bit, and that was their COVID response, which again we can see slow down in production. And then the previous owner obviously divest of the asset once they restore production kind of closer to that 4,000 barrels a day. Sorry, 4,000 cubes per day. Um, and then which is kind of just over 20,000 barrels per day. And at that point, they're basically able to sell the asset to Greenfire, right? So maybe like 24, 25,000 barrels per day. And it's like, okay, we have an operating asset. And my understanding, that was a pretty good deal for Greenfire, which is great. So the other thing I wanted to investigate here is the CSOR and ISOR. So the purple line is CSOR. CSOR stands for cumulative steam to air ratio, and ISOR here stands for instantaneous steam to air ratio. So ISORs normally are very volatile, so you can see them kind of being a little bit more volatile, but it's not necessarily bad. So the monthly SORs I'm getting right now, um, when I looked at my data that I extract, is about 3.16. So I'm getting 3.16 right now. So that's right here. So that's very representative of historic SORs, which is kind of good to know, right? And steam utilization I'm getting from those expansion side, which, by the way, as we talked about the demo and expansion, this is the more important asset, because that's kind of where the growth is taking place. So this steam injection rate, and let's compare it to kind of the previous ones. That steam injection rate is about 74,144. So 74,144. And here we see like essentially about, I would say, I don't know, it's like just 500 cubes. So remember, it's cubes, so it's not barrels. And that will be about 10,500 times 6.29. It's about 66,000. So 66,000 right here. So 66,000. So obviously they're pushing the steam injection rates kind of to previous highs, which makes sense, right? You want to allocate that steam and boost your production, which explains why oil is being really uplifted here, right? So as I mentioned before, the oil rate right now is in 23,456 for August. At least that's what I'm getting. So that's good to know. So we understood the cumulative SOR, which makes sense. So about 3 instantaneous SOR, which looks good. Water production, that's in blue, looks like it's trending well with the steam injection rates, because you want that ratio to be about 1, and that's kind of what I'm getting as well. So that's pretty good. And steam injection rate looks like it's being integrated to honor the bottom hole pressure, but then you have various events where you see the oil production drop, like here and here. Maybe this is like lower prices, lower, and obviously COVID lower prices. So from operational point of view, looks like it's like a typical kind of SECD operation, healthy SOR about 3, right? Typical trend of steam injection, typical oil production rate. So I'm kind of like what I'm seeing here, I guess. Okay, so in 2021, they tried doing field NCG co-injection and WSR. So water to steam ratio, this is something I monitor for this asset. So current water to steam ratio I'm getting is 1.142, 1.142. So let's see what historically. Oh yeah, so it's this is 1, this is 1.5. So it's about 1.1. So I'm getting number that's very close to historic numbers, which is great. So that's good. And NCG co-injection in cubes per day seems like they really tried to kind of, and look, let's see it in 2021 if they were cutting steam. So in 2021, did they cut steam? Yeah, looks like there is kind of decline in steam injection rates right here. So basically, you go from maybe 11,000 cubes to about 10. So you cut steam injection rate by 10%, and you're trying to pressurize those kind of legacy wells with NCG, where I would say on average they inject about, what is that, like 170 decks. So that kind of looks like their NCG co-injection strategy too. And then SOR should have been declining too, but maybe we don't see much of a difference here. So anyway, so that looks kind of encouraging, I guess, from operational point of view. So I'm happy with that. They have some slides here about the seismics, how they basically kind of like the different bitumen pays. That this is something I'm really interested in. I wanna see better understand the pay. So because so I looked at this, they have like initial oil saturation 81%, so that's very healthy. That's very typical. Porosity 33%, so that's typical. Average SAGD pay thickness 22 meters, so 22 meters, right? So when we think about this, you could have injector producer, and those can have about 5 meter difference. And now you go essentially about what 17 meters in chamber development, which is so 17 meters here, which is healthy. But the problem is like, what do they have inside the chamber? Like, do they have some heterogeneous geology? Like, this is something I want to investigate a little bit more. The permeability looks about 40. So this is vertical KZ. It's about 4 Darcy, so that looks good, and close to 6 Darcy in horizontal, so that looks good. The one thing it's kind of like, what does that pay? What does it look like, right? Seems like they have very healthy original bitumen in place. So those are the OBIPs. OBIPs, cumulative production and recovery factor on the operating area 34%, development area 8%, and project area 5%. So it seems like there is some room here to continue developing this asset into the future. But this is kind of intriguing to me. So I want to stop here for a second and maybe spend a little bit more time on this, and then move towards the demo asset and investigate. So seems like there is a cross section right here on that asset that they placed, and seems like there's some chamber development. But what's interesting is that they have clean sand in yellow, but then you see those kind of they have some heterogeneities here. So you can kind of start seeing the various kind of geological kind of heterogeneities. So those will be the muddy class breccias and the sandy IHSs. You don't really see much of those in the chamber, which is amazing. So that's really, really good. You can see more of them kind of at the top of the chamber. But and the muddy IHS, which is basically very shaly IHSs, you you don't really see them here. So that's really good. You see a lot of mud class breccia though, like in those like random areas, but maybe not as much here. Maybe a little bit more here, but all things considered, that's decent. Like this is something that will produce oil. So and now we can see kind of various ultimate recovery factors and the current OBIPs and bitumen production and recovery factors. So it seems like this is from 2021, 2022, but looks like nothing here really is between the ranges that they provided. So there is some room here to operate those assets and optimize further, which is explains why they're producing kind of at record oil production rates by integrating those infill and refill wells, where the production is a little bit higher here, which is great. Okay, so that was I think kind of a little bit more talk on the expansion side. Obviously, I could probably talk about this stuff way more and cover more slides, but right now I'm more interested in looking at the demo and kind of better understanding what the demo looks like. Um, so I will share now, share screen, the demo site. Okay, so right now we're looking at the little guy. So this one is the demo site, and this guy came online in 1999. And from the Google Maps that I showed before, okay, this kind of, you see, that makes a lot of sense now, because that river here, you see, none of the wells is actually facing south. All of them kind of concentrated in this area, or like right here. None of it is going through the river, which explains why they had to develop kind of a separate CPF, which is probably, I assume, was very expensive. The one thing people, I don't think, appreciate is that those CPFs, they're very, very expensive. And to decide to kind of develop a new CPF there, and now Greenfire has ownership of that, that's kind of a big deal, at least for me personally, because many financiers, they would look at those assets kind of like on the free cash flow basis and kind of look at their hedges. I'm more of a, I think, bottom up guy, so I would look at the kind of facilities and try to better understand kind of like what things worth, I guess. And what's really intriguing to me is like that the water is fund energy fund is made this move about acquiring shares in the company. And so despite the hedges they have, I find it a little bit intriguing here. So anyway, but that gives us some clues to potential redevelopment programs, in the future, because what you want to know, it's kind of like, okay, well, I still want to use that CPF, but maybe I'll put some wells, here, maybe some infills here, maybe some refills well there. So I really want to understand the opportunity here. Okay, so very different story from versus the expansion asset. From what we've seen, that's clearly what we're seeing here. Obviously, very healthy steam injection rates historically, right? So remember, this is 1999, right? So this is like legacy SAGD stuff. This is when kind of AER, Oestra, and kind of the Suncor, the in situ kind of demo test was done, and Sonova started integrating faster quick learnings and developing those assets. So seems like this hanging stone demo asset was like a original demo asset, right? Like a demo asset. It was truly a demo for SAGD to see if it's even feasible. So I kind of, in a sense, respect that. And you can see they kind of circulate it, I guess. You can see that circulation phase, but you can see immediate oil production. So maybe there was some learning associated with that little phase right there, right? So, which is kind of cool. 1999, man, it's wild. So anyway, they're peaking at about 1,500 barrels per day, cubes per day. 1,500 cubes per day tells us They at the peak they produced about, and this is the opportunity I think for this asset. They produced about 9,435 barrels per day or so. Don't take exact my word for it, but it's about that number, right? I guess I could pull historic data and take a look. But since then, we have a decline in oil rate. We have a decline, which makes sense because you have injector producers, steam chambers develop, and now you basically bring more wells and things drain. But it seems like they did not really sustain. So the legacy owner of this asset, whoever it was, they didn't really sustain that typical kind of SAGD oil rate, but they did have continuous steam injection. So they did have continuous steam injection, but the production did not respond to it, which is intriguing. Wow, this is very interesting. And then you have increase in wells that been, so well count, you see increase in well count. So increase in well count, maybe plateauing here. I think here they basically kind of the well count is down here a little bit, but or maybe it's up. Actually, I can pull the data and look what I get for current. So current production is 2857 from what I'm seeing for August. 2857. So that's very different from 9400 and 2897. Okay, 2857. It could be different now. Maybe they put some infill well and now production is like really up. No, it's remained to be seen. That's why I love this kind of stuff because maybe there's like an opportunity here to optimize, but the focus on the cash could be on the expansion side too, right? So this is why I need to do a little bit more studying of their slides and better understand where they kind of integrating those infill and refill wells. But okay, and here we see, and this is kind of the struggle, right? So the Saudis in this point, so 2015 kind of towards 2016, they're flooding the market. So WTI prices collapse. They collapse, and these guys decide to shut in production. So they shut in steam injection and they shut in oil production, and that lasts for a fairly long time here. And then to 2019, they restore the production. So we get that wedge, which kind of in line with maybe historical trend. They're trying to steam the chambers. This is the number of wells that coming back, but then COVID hit, and now you forced to go again. Like, man, I feel bad for these guys because that sounds like very stressful to go through this experience. I do have friends that work there for that I kind of crossed paths with many people, and a really close friend of mine used to work on that asset. But now that I'm learning a little bit more about this, I can like really feel the pain that people kind of went through, maybe shutting in that asset, restoring asset just to have another setback during COVID, and now it's back at those rates, which is, all things considered, is not that bad. So the other thing I'm seeing here, like, well, cumulative SOR, you can't really measure it here because you had such a big pause here. But what you see here and this is reasonable, I think, all things considered, this is very reasonable, where the CSOR, the ISOR is increasing towards, it seems like it's going towards 5. Maybe it's like maybe more like 6, 7 now. And the cumulative SOR is a little bit lower, but it is kind of on the higher end, which explains why the expansion side looks really good. It's about 3, right, as we talked, where this SOR looks a little bit higher. But then again, redevelopment opportunities to kind of like use surface facilities for something, just like maybe maybe do some innovative things on the site are there, and maybe like the technical team is approaching this. But again, I'm trying to study this asset right now and trying to better understand what's going on. So let me know in the comments what you guys think about this, right? Because obviously we did see in the past like really healthy production at like 9,000 barrels a day, so 9,400 or so. So that was achievable. So let's take a little bit further. So this is from 2021, obviously, right? So again, water to steam ratio. So water to steam ratio right here, water steam ratio is about 1, but then it kind of declines. So the water to steam ratio I'm getting right now from the demo site, not the expansion site, from the demo site, I'm getting, what am I seeing here for, it's about 0.918. 0.918. Okay, and this is kind of, the trend here is between zero point 0.5 and 1. So this is interesting. And they do talk about those shut-in periods, introducing NCG injection. The Yeah, so NCG co-injection is the orange line. So okay, sorry about that. So NCG is the orange line. So they go to 50 decks a day here, then they drop it, then they try a little bit, couple more boosts. Then the water production shuts in, and then they restore NCG injection on some of those pads. Because remember, those little pads right here, you have some area here, you have here, you have here, you have some communication here. So the reservoir engineers had to kind of mitigate maybe the bottom hole pressure, so they try different things, even though it's, as I'm studying this, it's hard for me to tell like which exactly, area was pressurized with non-condensable gases. Third party marketing issue, temporary ramp down of production. Okay. Yeah. So something to consider about the smaller asset. We know I like the opportunity here. Like I can see the challenges. I can see the challenges here, but I like the opportunity. I like this triangle. I like what could be done in this asset because it's been done before. You just need technical skills to do something meaningful there. Okay, what's going on here? So they talk about, so fluid interaction, no top gas, no bottom water, no lean zones. Great. That's pretty good. Okay, I want to see the geology a little bit more, just like what we've seen before. So porosity 30, so not 33. Oil saturation 95, very high oil saturation. Nicer thickness. Maybe that explains why the demo site was chosen first, because it has very nice pay thickness. Nice vertical and horizontal permeability is about 5 Darcy. That's pretty good. Okay. Oh, okay. So interesting. Current PBIP and origin recovery factors. So here we go. Yeah, so some of the older well pairs, it's funny, they name them in letters like A, B, whatever. Let's see if it's like this in the picture as well. Oh yeah. So each well, I've never seen that before. But I guess for in this case it makes sense because the asset is very small, so they'll have like a pad that's number pad, so pad 4, let's say, and then the pad will have, if this is pad 4, it will have a QPOJ. Man, I'm not jealous of the engineers that probably like manage those, but it probably takes time to adjust. Okay, so this is their configuration here and their pay thickness. You can see kind of fluctuates, right? So this is 255 to 75. So this is a cross section across here. And you could have maybe 20 meters here, maybe a little bit less. But then you have very nice pay thickness here. All right. I want to see the core. So infrastructure, this is the different pads. We saw those on the maps, on the map, the Google map originally. Demo bitumen production. Nameplate. This is per month, cube per month. And this is the actual performance. Yeah, I wish I could see the core. I want to see the core. I'll try to find a way to see basically their geology. Here we have some signatures here, but I don't see the core. Yeah. Anyway, really interesting performance here, right? So the expansion side was much better. Okay, let's see. Maybe I'll do 10 more minutes, kind of try to look through their slides to better understand kind of the corporate strategy. These slides were obviously not up to date; those are older ones, but they provide me with good opportunity to better understand kind of the oil production. Because the way I look at this, I'm more of a technical guy, like, and this concept of Peter Lynch, know what you own. Um, so yeah, know what you own. All right. So right now, what we're gonna do, we're gonna look at the corporate slides. So stop screen. Okay. Present, share screen, and we're gonna pick corporate presentation. Okay, so right now we should be seeing the updated corporate presentation, corporate snapshot. So this is today, right? We want to be fair to the company and really understand this is as of September 2024. So we're familiar now with the demo site. So at least I am. I don't know if anybody even stayed to watch this, and hopefully let me know if in the comments if it's helpful. I know it's a little bit kind of like not something that maybe like I'm prepared for much, but I figured I might as well force myself to better understand what's going on here, and I think I do. One of the main kind of conclusions I have is that the demo site is really intriguing to me because they were able to achieve really nice production rates historically, and they have the capacity to do it. I think it's about 11,000 barrels per day, and at the peak they were able to achieve about 9,300, and they have 100%. So you can see it here, right? Demo site. So they have right here in demo site, it says capacity is 7,500 barrels per day. I'm not sure why it says that, because they were able to achieve 9,000 barrels per day before, at least from the graph that I looked at historically. Because you guys remember, like we saw a graph and it said about 1,500 barrels per day before, but maybe there was some modifications in approval. So need to do a deeper dive on that. But anyway, that opportunity though to achieve those previous rates is there. It's just you need technical skill to execute on that. But maybe the capital is being allocated towards the expansion side. Now the expansion side, beautiful production rates, right? So beautiful production rates, but it has 75% working interest, where the demo has 100% working interest. So this is like interesting to see. And again, what's intriguing about this asset that I had never seen before, because let's say in this picture you have Athabasca Lismer, right? But then you have Athabasca Hanging Stone here. So I'll know something like this. You have like Jackfish here, Kirby here. But what's really interesting is that you have, if I was to talk about, let's say, Mech Christina Lake, which is right here, it's one big giant integrated asset that produces 104,000 barrels per day. So you would think that Hanging Stone expansion and demo kind of thing will be one asset, but guess what? Between those, there's like this river body there, and you just can't put anything through it, which it's not. I guess there's regulatory issue. That's why they invested a lot of money on demo in 1999, a lot of money on the expansion asset, but there's two separate entities, which is intriguing. Anyway, deeper dive now into the working interest production. So it seems like 19,000 barrels per day in Q2 2024. The production is increasing. So now updated 2024 outlook 20 to 21,000. And the demo and the expansion site production, as I shared before, on both assets, just to kind of keep everyone in the loop on what I'm seeing, is 26,313 as of August. So 26,313 313, and about 2857 out of that will be 100% theirs, Greenfire's. So you remove that from that number. So let's say it's about 23,000 and 75% ownership. So if I multiply 26,313 minus 2857, I guess I get 23,456 times 75. So that's 17,592 plus 252857. So I get 20,449. 20,449 as of August, which is exactly in that range. So the company knows what it's doing when it's guiding on the working interest production. It's just, I guess, what's confusing here is that the demo is 100% as indicated here, and the expansion side is 75%. Okay. So let's look a little bit more into the financials. So the ticker is GFR, shares issued 69 million, market cap, I think it's the same. So the stock today was $10. So it's 687 million dollars. That's the market cap. But they do have some debt. So debt 239 it seems. So 12% senior secured notes due 2028. So no pressure on the debt structure. But then again, what's really interesting is this whole Waters Fund kind of action that's been taking place lately. Yeah, so 75% to debt repayment, hedging policy. So 12 months, 50% of PDP hedging policy. So that's the one thing that kind of like I've been trying to better understand what's going on here with that hedging strategy, because the netbacks weren't like that high, but that's maybe for another video. Okay, so they explain basically everything we already studied. So again, we're getting those numbers as well. Growth in production, I see the growth, which is good. This is how much they spend in capital expenditures, and it gives us a perspective, I guess, on the enterprise value. It's intriguing to me personally because Strathcona acquired Serafina for close to 60,000 per florin, right? So here, if you have this production for these guys, where we were adding like 20 to 21,000, if you multiply, let's say, by 50,000 per flooring, you get about 1 billion. So the opportunity, I guess, here when you have like 687 plus the debt, if they're able to pay down the debt, let's say over some consistent amount of cash flow over like 3-4 years, assuming nice oil prices, um, that's kind of the delta between 687 to a billion at 50,000 per flooring. But if they're able to maybe produce more, bring it more towards like the capacity angle, then it incrementally becomes better kind of a proposition. And the thing I talked about, the refill wells, is they talk about capital efficiency productivity of refill wells. So I'm gonna be looking into this very closely, trying to understand kind of what they're doing here. But then again, that's for another video. So legacy operator, I guess, is Jacobs, but you can see their production. But the asset production, I think it's like 26,000, right? So Sino gets some portion of that. By the way, I'm not sure how they feel about this whole water situation. Oh, okay. So this is the demo asset. We saw the production there. Remember the curtailment I talked about? So the suspensions. I guess we could have just looked here and learned about this, but I guess we did more of a technical dive into that because I had to make things a little bit harder for myself, obviously. So, all right. Oh, yeah. So here they talk about infill wells, refill wells. So, infill well, you have this wellhead at the top, and then you have an infill producer. Refill well is like a well that's coming from previous producers, just you redrill it. Bunch of producers doing it right now. Like it's not, people just kind of do that type of strategy. They just go basically sidetrack this thing. often step out, I guess. But this is the strategy, and maybe that's why we see the production increasing. So I don't necessarily think it's a bad strategy. They also have those extended refill kind of rich refill producers, but intriguing nevertheless, right? Because the numbers right now suggest that what they communicated when it comes to basically their performance right here is that they do produce that. But if those refills start to producing really, really well, we have that opportunity to for higher, essentially, uh, oil production. And if prices supportive here, assuming they able to cut some costs here, maybe they can start paying down the debt, and then maybe like buying back bunch of shares. And then if you look kind of historically, maybe in 5 years, they're able to trade at maybe 50,000 per flowing. And this way they're going to get to billion considering that production rate, but maybe they're going to produce like 25,000 barrels a day, which creates more of an opportunity. I don't know. So I don't know. I learned a lot today. I think it was more of a study. It's not a financial advice. Let me know in the comments what you guys think, if it was useful. But I really tried to understand the demo side, the expansion side, really understand what's going on here. One thing I learned is that there is this river here, right? So they had no choice. They had to basically expand the asset here, and then Greenfire basically took ownership of both those assets. But then there is JV, and then the question also like, hey, what's going on with the JV? Is that something that's sustainable over longer period of time? So anyway, let me know in the comments if you like that video, if it makes sense, and I'll see you next time. Thank you.